I would basically say that in 4 decades of being in the investment world, it's probably the most confusing time for investors they probably have ever had. Well, if you just go down the list and the conversations and the media and the pundits and the facts and the fiction and all the data that's placed into the mainstream media circuits, out of maybe 50 messages in a single day, there's got to be 40 different opinions. You know, I get up early in the morning and I drive to the office 5:30 or 6. I like to get ahead of traffic. I like to think, I like to listen to the news and different media outlets and different news resources. I like to get online and I like to look around and see, what is the message that all these so-called experts are putting out there for investors and financial advisors and CPAs and retirement account managers, what they're all going to listen to. And then at the end of the day, they're going to say, I heard 25 messages today. 20 of those messages conflicted with each other in some form or fashion. How am I ever going to decide who's right or wrong? So when you have market confusion, you have paralysis. Now, I liken it because I grew up on a small farm in South Texas. I liken it to like rounding up chickens in a thunderstorm. And that's what the market is like today. Some of the chickens hear a little rattling and they run inside the coop. Some chickens hear the rattling and they're trying to fly the coop, get out and run as far away as they can. Some chickens will literally stand there as the thunder starts and the rain falls, and they'll drown in 2 inches of water standing right where they're at. So the question is, what is the right reaction? Well, that depends. It depends on who you are. It depends on your sophistication. It depends on your experience and your expertise. If you've never been through a thunderstorm before, who knows what you'll do? Maybe you'll fly the coop, or maybe you'll tuck tail and run inside the coop, inside the closed-in coop. Or maybe what you'll do is stand there and drown, just doing nothing, paralyzed by uncertainty. When I think about my job at Accredited Enterprises, it's not just to see what we're doing today, it's to look down the path forward and say, what happens after the next presidential election? What happens after the next cycle? What's going to take place when the midterm elections take place? And could there be a switch of leadership in the House and the Senate, which might derail the current president's plans? What does it look like if Russia and Ukraine finally settle the war? How does it look in Venezuela if they do or do not bring on more crude oil in the world? What does it look like if the United States try to refinance their $9 trillion in debt, but unfortunately the dollar's dropping and interest rates go up, and now all of a sudden the plans of expansion are stymied by a devalued dollar and increasing inflation? See, I'm just saying that market confusion is something that really is almost like poison in the water. Because that poison in the water says, I don't know if the poison is in the water. I don't know if it's been diluted so that even if I drink the water because I have no other source, it's still not going to kill me, but it's not going to feel good. Or do I just take the chance and foolishly drink the water knowing the outcome is the outcome? Most investors, they like to stay close to home. They say, when there's a lot of chaos out there, I want to be close to the vest. That's what that old cliche means, close to the vest. I want to see what my cards are. But I think most people don't even know what the cards look like anymore. You get on ChatGPT and you ask basic questions and you think, well, ChatGPT gathered all that data off the internet, so the answer must be correct. If you really peel through that data, it's about 45 to 50% incorrect. It's only gone out and received information, right or wrong, from the internet, comprised that and says the most logical answer from gathering everything we could find about that topic says it should be ABC. But if C was all done by crooks, liars, Ponzi schemes, and market manipulators, 1/3 of my answer has been distorted or wrong, and the final answer may be as much as 50 to 75% wrong. The same thing happens with your financial planner and your CPA. In our business, we go talk to financial planners, and they have no interest in learning about oil and gas. They don't want to take the time. They know virtually nothing about it, but yet their highest income generators, their highest income earning clients, their highest net worth clients are listening to the one big beautiful bill saying, I need to be in energy. I want the tax write-offs. I like the tax-free income. I want to buy mineral rights. But these financial advisors don't do anything about it. Do you know why? Because they can't figure out how to learn about it. They know nothing about the topic. They are scared of it because they're afraid that it's going to show they're really not that well versed at most asset classes. They want to stick with those same asset classes. They know every month and every quarter they can get an asset under management, a valuation, fair market value, FMV value, and they can charge you that beautiful financial advisory fee. They don't want to complicate their lives. Just give me your $10 million, Go home, I'll charge you my fee, I'll make you 7-8% return. You're not mad, you're not happy, you're just okay. And it's kind of like watching that frog in that pot boil to death slowly as the heat begins to rise. What about CPAs? Why do CPAs not try to clarify or at least delineate market confusion? Why don't they say, there's a lot of tax benefits in this asset class. The one big beautiful bill provides this kind of an answer or solution for your high income tax problems. Why do CPAs not do it? And I'll tell you why. There's no upside for them. If a CPA has 100 clients and 50 of those clients are making $1 million or more, that CPA wants simple tax returns. They don't want complex ones. If you invest in oil and gas and work interest in minerals, he's like, man, those are two asset classes I'm not familiar with because 99 out of 100 of my clients don't invest in it. So now I got to take the time, read the tax codes, figure out the right forms to file to make that 1 out of 100 $1 million plus income clients get his tax returns filed and how to do it and not make me look stupid. And if I recommend any of my clients a CPA to invest with Accredited or anybody else that may be legitimate, they're worried that if it's wrong or it's failed or it's bad wells or it turns out to be a really unethical sponsor, that client may blame that CPA and say, I don't want to use you as my tax preparer anymore. There's no upside. So market confusion is not really that confusing. Market confusion is you as an investor must learn how to take that voluminous amount of input of data, that 50 sources of information in a single day, and say to yourself, let me do a process of elimination. It's not trying to find the right information. It's how do I get rid of the 49 incorrect pieces of information. I got to decide what is really most likely the truth, what's most likely the right direction and answer, and what are the other 49, 48, 47 pieces of information that are tainted, slanted, or they're put in such a way they look credible when they back up with virtually zero empirical data. See, that's what I do. I'll listen to 50. I eliminate 47. I'll analyze the 3 that I think have some substance. I'll analyze it by topic, by subject, by class, and I'll decide the first speaker had 1 of 3 things correct. That's great information. It makes sense. It's empirical. I believe he has the credibility and the background to make the statement on that one item, and I think he's probably right. Number 2, I think she's right on the third part because I think she's an expert in real estate. She's talking about mortgages. That's 30 years of experience. The other 2, she's just trying to add to her repertoire so she can be more of a successful expert in financial matters. And you get my drift. So market confusion is really about not knowing the market as far as terms of accurate details, reliable information that you can then take in yourself and dissect it and digest it and figure out what's right or wrong. So here's how I do market confusion. I limit what I look at because what I want to do is stay very focused on the assets and the investment that give me what I want. I want cash flow. I want lower taxes I got to pay. I want as little taxes on the income that I make. And what I want to do is have something that has the least amount of risk and the least amount of capital calls or anything else that may require me to come out of pocket unexpectedly. I want simplicity. The second thing I want to offset market confusion is not only to narrow what I'm looking at, but I want to find the right person, the right company. I want to narrow the who. I'm looking outside of Dallas-Fort Worth right now as I'm filming this, and it's a massive place. It's 8-9 million people. And I can tell you, most of those people out there couldn't tell you which way the sun sets tomorrow morning. They're just nice worker bees doing their job going from point A to point B. And then amongst those worker bees are maybe a few queens who are acting like they're the queen of the hive, but they're really false. They're really just false prophets who are pitching unsuspecting individuals and telling everyone they're an expert at this or that. And what they're really doing is living off other people's ignorance and laziness. So market confusion is hard work. It's hard work to do the homework to decide what's true, what's not true, what's the most likely based on the preponderance of the evidence. So in order for you to narrow your field, you also got to work hard. I got to work harder at protecting my money, and I got to work harder at maintaining and retaining my money than I did earning it in the first place. And the last point I'll make about market confusion is guess what? It's always going to exist. It'll never go away. Even if today's confusion ends up being the midterms turn out to be the same party as the White House, the next presidential election maintains the same political party, the policies in place today last another 6 or 8 years, there's still market confusion because we're no longer an isolated geographical focus. Now it's a global market. It's everything from Japan to Africa to South America to Canada. It's an entire global situation. So if you want to eliminate market confusion from investing, you might as well not invest. What you have to do is learn how to not get stressed. So remember this one fact, if you remember anything from today. 95% of what you think is going to go wrong never happens. So focus on the 5% you know is going to happen the way you think it is. The other 95%, you're never going to be able to change it, and most likely it's never going to happen. So take out market confusion from your equation. Just say market confusion is a mainstream basis to investing. I have to learn how to manage the emotions. I have to learn how to get data that tells me how to decipher out the bad news from the good news. And I have to be very specific on the who I'm going to invest with and exactly what I want from that investment. If I do all of that, all the chaos and confusion around me goes away. Thanks for listening.